Hey there! Today, we're diving into a topic that could make all the difference in your financial journey. We're going to debunk 5 pesky investment myths that might be quietly keeping you broke. These myths are like those pesky weeds in a garden. They need plucking out to let your financial success bloom. If you've ever thought that investing is an exclusive club for the rich, think again. This myth is as outdated as floppy disks. The truth is, anyone can start investing with just a small amount. Whether it's through apps offering fractional shares or a simple savings plan, investment is not just a playground for the rich and famous. Imagine trying to catch a unicorn. Sounds impossible, right? That's sort of like trying to time the market perfectly. Many think great investing means buying at the absolute low and selling at the peak. But what really works is consistency. Think of investing like planting a garden. Watering your plants regularly, even if there's a little rain now and then, yields much better results. Feeling like you need a PhD in finance to invest? That's a myth that stops many in their tracks. Sure, knowledge is power, but you can begin investing with basic understanding and learn as you go. Simple, diversified approaches like index funds or target date retirement accounts can be a great start. Remember, even Warren Buffett started somewhere, and his journey wasn't all front-page headlines. When we think of investments, stocks are often the first thing that pops to mind. But placing all your eggs in one basket limits your growth potential. Beyond stocks, there are bonds, real estate, mutual funds, and more. Diversification is like a buffet. You get to taste a bit of everything, which not only makes your financial plate fuller, but also more secure. The allure of high returns can be dazzling, like fireworks on a summer night. But remember, quick gains can just as quickly disappear. High risk doesn't automatically equate to high reward. Smart investing requires balancing risks with experience and foresight. Always assess your risk appetite and don't get swept off your feet by flashy promises. Meet John, an everyday guy who got swept up in these investment myths. At first, John believed he needed a fortune to invest, tried timing the market, and dabbled only in risky stocks. But John learned his lesson. By diversifying and investing steadily, he saw true growth. He's now comfortable watching his investments sprout like a field of wildflowers. So how do you avoid stumbling into these pitfalls? Start small, stay informed, diversify your investments, and most importantly, keep your expectations realistic. Think long-term wins over short-term thrills. Reevaluating these myths can transform how you approach investing. Your future self will thank you for the steps you take today. Have you experienced these myths firsthand? Share your stories below and let's learn together. Don't forget to like, subscribe, and hit that notification bell for more insights. And there you have it, folks. Let's keep growing smarter and wealthier together.